Hi, welcome to the Market Alert for Friday the 9th of October 2015. So the market trod water yesterday, waiting for the central bankers to pontificate about why or why not they're going to increase or keep rates on hold at 7 p.m. So the market was really quiet yesterday, waiting for what we all know is there's never going to be a rate increase. And this is becoming more evident as the days go by. If you just look at yesterday's news, you can see that even the IMF are warning of a 3 trillion corporate credit crunch looming as debtors face a day of reckoning. So any increase in interest rates is just going to cause chaos in the bond market. So they've painted themselves into a corner, really, and this is why the market was quiet yesterday. They're just waiting to see if the Fed are actually going to do anything, and frankly I just cannot see how they can do it, and the market I think has come to that same conclusion, which is why it's continuing to move higher. Even Yellen said in the minutes yesterday that the Fed's rate delay spurred by worry over low inflation. It's all absolute tosh, it really is. They know as well as we do. I mean, this here is just an absolute non sequitur. It's a non-starter. Inflation has been below the Fed's 2% target for more than 3 years. They can't raise rates because it will implode the bond market. So, and what people forget is that the 0% rate that we're actually on effectively for the Federal Reserve is actually emergency rates. This is emergency rates for 8 years. Not had a rate increase in interest rates in the US since 2009. So, for 9 years. So again, it just shows you how bad things are below the surface. That being the case, if we have a look at the daily chart, you can see the market moving ahead yesterday, where this is a market on levitation. There is absolutely no new buying. This is the computer programs moving this market back. And because they can't increase rates and the economic news is starting to get drearier by the day, don't be surprised if we don't see the helicopters dropping more money, and which also is known as QE, and the stock market going higher because it only finds its way into the stock market and the bankers' pockets in bonuses. The market's moving higher. There is no new buying, but at the moment, if nobody's selling into it, then it's free to just continue to move higher. And the next target is 17,352. The market took out the 16,938 again yesterday, and the 16,966 was also removed, and also, of course, the psychological level of 17,000 at the moment, 85 points above that. The market's quiet again on the overnight, and that's because China is basically very quiet. We just moved back here, just quiet. It's moving high. It's up 1%, up 32 points. And the fact that nothing's happening in China or selling off at the moment is going to impact the pre-market session. And again, I would say paper trade this session if you want to do anything, or you'd have to go for a very low bet per point rate, because it says fairly quiet. And again, the market will probably cheer up for the first part of today's session at 2:30. Or just before seems to be the thing now as well. We're getting some really good signals just before the market opens, and then trade 100 points before the market opens. If we just go back and have a look at yesterday in the pre-markets, you'll see there we've got the signal, and then the market trading up around 60 points there. But of course we're waiting for the FOMC the day before. If we just go back as well, and you'll see the market there trading up 100 points as well before the market then moved lower. So the market fairly quiet on the overnight. So again, I would stand aside and wait until the afternoon session. And of course, now said that the market's going to move very nicely to the upside this morning, but really there's not enough volatility there. 50-point range is not a lot from 4:30 a.m. The only thing we got yesterday was after the Federal Reserve minutes came out, the market then moved higher for about 35 points, and that was about it. I sent a note out in the first part of the session to say leave it alone. You could see the market was going nowhere, so I sent out an email to say stand aside, and then that was it really. And again, notice how this just before the Fed minutes as well started to move higher as well. Very strange things happening at the moment. Hopefully this is going to be short-lived and it's going to clear off sooner rather than later, because it takes some figuring out what it is they're actually doing at the moment, where we just got into a pattern of what the market was actually doing. At the moment it's very strange, but again, hopefully today we'll see things change as far as this is concerned. Right, let's have a quick look at the news. Anything to move the market. Again, they're wheeling out the Federal Reserve members to speak, one at 2:10 and one at 6:30. Again, another change of Fed policy. You never used to see this. Nobody ever was wheeled out, certainly the lesser known members of the Federal Reserve, but now they seem to wheel them out willy-nilly just to get them on the TV to say everything's fine. So they're coming out at 2:10 and 6:30 p.m. So again, that should see the market move just slightly at 6:30 p.m, but how much it moves, who knows. And finally, the implied volatility, 14.79, dropping off a cliff, which is indicating that the market's going to continue higher at the moment. If this comes down to the 10% levels, which we saw in late August before we had the 1,000-point drop in the underlying market, that's fine by me. The lower, the better. So let's hope this continues to come down, because that will bring the volatility back to the market, and then we'll see the moves that we had during September, where we collected over 2,000 points in this market, and 1,200 the month before as well. Right, that's it for this morning, for the week. I will see you in Monday's edition. Have a great weekend. As ever, thank you for your support. Hang in there. Things always change. It's just a matter of time, that's all. And looking at the implied volatility chart, it doesn't look too far away that we're going to see this volatility return to the market that we saw in August and September. That's it for me. See you in the next one. Thanks for watching.